Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and returning on the show with us this week is Rick Rule. We're back for one of our Palisade Sprott monthly market updates, and this week we're going to break things up. We're going to put an interview out today, which is December Thursday, the 15th, and I want to talk about, of course, the action in the gold stock. So, Rick, let's start by talking about the gold stocks, and then we're going to put out another piece on Sunday to talk about uranium, which is looking a whole lot different than gold. Rick, today a precipitous freefall has continued after the Fed meeting for gold and gold stocks, and the narrative of too much too quick from January of these gold stocks moving up is starting to not look like the appropriate thesis. We might be double bottoming, or this bull market might not be a thing. What do you think's going on over there?
Well, the narrative with regards to the gold stocks and the gold price gets better and better. The market gets worse and worse. In situations like this, I think the strategy for investors and speculators is twofold. The first is allocate capital on an alpha basis in private placements whenever you can for the best companies on good terms. If you look back to, say, June, when the market outlook for junior gold stocks was better, they were 35 or 40% more expensive than they are today. And your ability to participate in private placement financings was non-existent if you were prudent. There are deals getting done today with full 5-year warrants that wouldn't have required any warrants at all 6 months ago. So from the point of view of a sophisticated, accredited investor, the first quarter of next year, I suspect, will be superb. It will be superb because the aftermarket action in the gold sector, perhaps in the particularly in the junior gold sector, will be lousy. The second thing is that for the beta investor, at some point in time, the narrative will overwhelm the market, which is to say that gold will be cheap enough, and the confidence that we're currently seeing in the general securities markets will recede. The beta investor, the one that participates in the direction of the market, will have to trade the market on a technical basis. And there is now enough liquidity in various instruments. We, of course, prefer the Sprott Junior Gold Miners Trust. But whatever index you prefer to trade, the beta investments more and more don't involve a portfolio of individually selected junior stocks, because those junior stocks expose you to single company failure risk, and they expose you to liquidity risk. So I think the speculative response to the market that we're in is really twofold. Alpha investments by way of private placements anytime that you can do it in the best of the best juniors. Beta investments when the market tone returns, and in that case, not through portfolios of individually selected stocks, but rather through the ETFs, which expose you to the direction of the market, but with less liquidity risk and no individual company failure risk.
Rick, the GDX and the GDXJ are down something like 15 to 20% between yesterday and today. Oftentimes after a sell-off like that, you can see a bounce come out of it, but something tells me that this sell-off is indicative of some more days or months ahead. Do you think that we're going to continue to see this harsh sell-off continue?
Colin, that's way above my pay grade. I don't know. I really haven't seen anybody over 40 years whose market forecasting track record is worth consulting. I can tell you that the gold narrative and the fortunes of gold mining companies has not deteriorated by 15% over a day or two. The truth is that the values get better every minute. And you pay attention to that by understanding the delta between price and value. If that's something that you don't understand, I think what you do is, rather than trying to catch a falling safe and breaking your arms, you allow the safe to fall, hit the street, and crack open. In other words, you allow the market to recover of its own volition before you start playing the beta game.
Fair enough. I think one interesting development has been the fact that gold has been falling and the gold stocks have held up relatively strong. This is something that Sprott, I believe, has put out in their Sprott Thoughts newsletter over the last couple weeks, as have several other analysts. I'm not sure how that's holding up the last couple days, but what do you make of the relative strength of gold stocks?
Well, there's interesting diversion there. And sadly, I don't think you can draw any conclusions yet. I think that the conclusions will ultimately be drawn in hindsight. It may be that equity investors are wrong. It may be that the sell-off in the bullion comes to affect the gold stocks. It may be conversely that past is prologue and that the strengths in the equity relative to the bullion presages stronger bullion prices. I don't know the answer to that. What I can say with regards to the equities is that the management teams of the senior mining companies have been relatively more prudent in the last 12 months of a bull market than they have been in prior bull markets. There has been less misallocation of capital in the gold sector than there was historically. And the consequence of that was that the income statements of the producers reacted more dramatically to the gold price. That is, that the producers constrained their instincts with regards to ill-fated acquisition or ill-fated capital allocation and maintained their cost discipline, which meant that the increase in gold price was unusually reflected fairly immediately on the income statements, which is one of the reasons I think that the equities did so well.
And finally, Rick, looking back through the cycles you've experienced in gold bull markets, can you draw any analogs to previous times where we maybe had what seemed to be the beginning of a bull market, and then there was such a severe pullback that it really kind of tamed things before the actual bull market started?
Yeah, mercifully, if you're as old as I am, Colin, you can find historical examples for anything that you want to illustrate. So I have certainly seen things like recoveries in 2012 as an example that presaged a good move in gold that ended up being stillborn. I have also seen 50% cyclical declines that didn't derail secular bull markets. I'm thinking back to 1975 when that market, the bullion market, fell from $200 an ounce to $100 an ounce, shook a bunch of people out, and ran from there to $850 an ounce. So the truth is that I can find numerous examples to substantiate almost any case I want to make. But the truth is, Colin, with regards to the bullion, I sleep better owning it than not. And with regards to the gold stocks, the fact that they're down 35 or 40% arithmetically, at least some of the ones that we follow, means from my point of view, they're precisely 35 or 40% more attractive than they were when the market had a firmer tone.
Well, summing up, Rick, then before we end part one of our interview here, we don't know what we don't know. Stick the course, quality investment, strong PPs, good terms, good management. Anything to add to that for the worried investor right now?
No, but I think we should revisit that a little bit. When I say strong PPs, what I really mean are tier one deposits, or at least tier two deposits, tier one management teams, and good terms. It's in markets like this that you have the ability to get in bed with really good people in really good deposits and still be allocated reasonable terms, fair terms. It's at times like this when tier one management teams have to give you fully tradable 5-year warrants. This is not the time to settle for a 24-month half warrant. This is not the time to settle for a company whose board of directors consists of a butcher, a baker, and a candlestick maker. This isn't the time to get involved in an area play surrounding a tier 3 deposit. This is the time to get the best of the best and good terms too.
Rick, thank you for coming on and sharing your thoughts on the gold market. We will be back with uranium discussion here momentarily.
A pleasure, Colin. Thank you. think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?